Hello, everyone. Good morning, good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited and grateful to be with you here this morning one more time as we get prepared for the London and the New York session today. Well, before we kickstart today's update, I want to appreciate every single one of you who had kept your cool and at the same time been patient and especially as a result of the network issues that hindered us during the New York trading session yesterday. Sincerely, it was very, very painful as I was unable to do follow-up details to all of the financial instruments on our watch list yesterday due to technical glitches, which has thankfully has been resolved at this point in time. And I am thrilled to be back with with a clearer and stronger voice after recovering from a sore throat that lasted about 3 days thereabout. Though it's still there, but I'm grateful that I can still speak very clearly without stress, and I hope you can hear me very, very well. So I want to express my gratitude to all of you who showed concern during this time, and of course your support and well wishes means a lot to me. Thank you very, very much. Now let's get down to the business. Yesterday we had incredible trading opportunities. Thank goodness we were able to discuss this prior to these opportunities, and if you had followed those instructions appropriately, you will definitely taking advantage of these opportunities. We saw how the US dollar gained quite a lot of strength yesterday following the ADP data, which actually came in beyond expectation, favoring the US dollar. And you know what this simply means from a fundamental aspect. The positive data from the ADP is likely going to incite the Fed to raise interest rate one more time, and because of this, majority are dumping the safe haven gold spot for the US dollar, and we have been seeing that traction in the market. So we are going to be looking at that too and see how we can manage our positions ahead of today's trading session. Then today we're also looking forward to a very major event coming in from the from the United Kingdom's economy. We are going to be looking at that too and how we intend to position ourselves for these trading opportunities. So today we'll dive deep into the latest market movements, technical analysis, and potential setups that we can capitalize on. And of course, you know how we do it. We are going to be relying on simple parameters such as trend lines, key levels, and of course chart patterns to identify potential trading opportunity ahead of the London and the New York session today. So with that being said, let's buckle up and get ready for an insightful and interesting session this morning. For those who are joining us for the first time, you are highly welcome. And what we simply do here is to come together as a community in anticipation of both the London and the New York session, as we always review all the financial assets on our watch list, our current positions, and strategically position ourselves ahead of both the London and the New York trading session. So we normally focus on the 1 hour time frame basically, which of course is our execution time frame. And actually this is a follow-up detail to my videos on which I shared during the course of the weekend. So if you had not watched those videos, please do, as you will get to understand or have a background knowledge of how we got to this point on the chart, how we were able to identify our major trend lines, key levels for the week, and also it will help as an educational guide to understand how to use price action to identify potential trading opportunities from the current market structure. So with that being said, let's dive right into the business for today. And before we do, the first thing we normally do is to check on the economic calendar, of course. By checking on the economic calendar, we know that these fundamental factors often manifest on the chart in technical patterns, and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us enough information of better timing, position ourselves in such a way that we can catch a potential trading opportunity prior, during, and even after this event. So with that being said, here we shall be diving right into the economic calendar. And please, I would like to get some feedback as regards to the sound quality and the video quality too as well. Let me know if things are going on well and fine. Most of you don't normally comment in the comment section. I'll really appreciate your comments. Your feedbacks really goes a long way in ensuring that I'm giving you a better experience out here. So I would like to know in the comment section if there are no issues with the sound quality and of course the video, as this will enable me to do the appropriate adjustment. So thank you very much, as I look forward to seeing your comments in the comment section. So with that being said, here let's look at the economic calendar and see how we intend to what are we looking at for today. So today is a very, very major significant day for majority in the market, especially traders and investors who are involved in the currency pairs that involves the pound sterling. So today, in the next 1 hour, next 2 hours, I think, we are going to be looking forward to a series of high impact event coming in from the United Kingdom's economy. So we have the Bank of England minute, we have the Bank of England monetary policy report, we have the asset purchase facility, and of course the key moment is the interest rate decision, which of course majority in the market is looking forward to. And from the previous data we have here, the previous rating is 5%. So majority expecting, initially we were expecting a 50 basis point hike, but with the way things are going, based on the stepping down of the inflation data, we are likely going to be seeing a 25 basis point. That is what majority in the market are looking forward to, and this could likely drive the pound sterling to new highs. So we are going to be looking forward to that one too. Then we also have the vote rate cut, we have the vote rate hike, we have the vote rate unchanged, and the monetary policy summary. All these are going to be happening simultaneously, so we need to be very, very careful, as there some level of volatility will come in that time. And one thing about volatility is this: I always like to be in the market before the volatility happens, so that we can already be in the market to avoid all the margins that brokers normally put on these assets whenever the event is on. There's always a very wide margin during that time, but if you're already in the market before that time, then you can actually capitalize on this. So we are going to be looking at how we can actually position ourselves in such a way that we are in the market even before the event starts. Then we're going to be having the Bank of England's governor, who is going to be having a speech, of course, 30 minutes after these events have happened, and this is going to be giving us an insight into the monetary policy of the United Kingdom, which of course will give us an idea of how healthy the United Kingdom economy is. So these are very, very high impact event coming in from the United Kingdom's economy. Then moving forward, about how many hours from now? About 5-6 hours from now, we are going to be looking forward to the ISM Services PMI coming in from the United States economic docket. So this is released by the Institute for Supply and Management, and it shows the business condition in the U.S. non-manufacturing sector. So it is worth noting that the non-manufacturing sector does not influence either positively or negatively the GDP as much as the ISM manufacturing does, but a result above 50 is considered as positive and bullish for the US dollar, while anything below 50 is considered as negative. Now remember, we had the ADP employment change yesterday, which came in beyond expectation. So attention is now shifted for those who are trading the US dollar. Attention is now shifted again to the United States to see what the actual data for the ISM Services PMI is going to be. The previous data came in at 53.9, that is for the month of June, and for the month of July, economists are projecting 53, So it's a little bit lower than the previous one, but all these data are still above the 50 mark. So we are going to be looking forward to what the actual data is. And of course, as technical traders here, what we want to be doing is to sniff the current market structure, look out for patterns and structures that will make us position ourselves in such a way that we can catch that potential trading opportunity prior, during, and even after the event. So with that being said here, let's dive right into the business. I'm yet to see some feedback, please. I would really appreciate your feedbacks. They go a long way in helping me to know that we are on the same page here. So I really appreciate your feedbacks. So with that being said here, let's dive right into the business. And as usual, the first instrument, hold on a second. So the first instrument we are going to be taking this morning, as usual, is going to be the USOilSPOT. Sorry, let me take some water. So on the USOilSPOT yesterday, though I wasn't able to do follow-up details on this asset due to network issues that I told you all I experienced yesterday. But if we had followed the instruction I'd made mention of on what we discussed about here yesterday morning, you definitely have caught this bearish momentum that triggered during the New York session yesterday, and especially after that ADP data. And the reason why we are seeing this from a fundamental perspective is simply because of the strong labor market in the United States. And as a result of this, majority are believing that there's likely going to be an interest rate hike as the US economy is getting stronger. And as a result of this, this is not going to be going down well with the inflation status of the United States. So as a result of this, majority are thinking that there is likely going to be a rate hike in the next coming interest rate decision. And this is making majority to dump the safe haven assets and buying the US dollar. And of course, the US oil is directly proportional to the movement of the US dollar too as well. So the stronger the US dollar is, the lower the US oil prices is going to be. So let's run through how the week started for us and what led into the decisions we have made so far this week. So I'll zoom right into the first couple of days of the week here. And at the beginning of the week, in fact, it was quite a very interesting start to the week as we capitalized on a bullish momentum after identifying this flat channel. So we saw our price was initially confined between the $80.20 level and the $79.93 area to give us a flat channel to work with. And of course, by now, you know how we do it in this community. We wait for either a breakout or breakdown of that range to give us an opportunity to buy or sell. Now, with the breakout of the $80.20 level, we capitalized on that bullish momentum. We added more positions at the breakout of the $80.50 level. Then we also added more positions at the breakout of the $81 area. And then we also had another one at the $81.40 level. That was on Wednesday. That was yesterday. And in fact, it was quite an interesting first half of the week. Now, if you remember vividly what I made mention of yesterday, we talked about the parameters that will be guiding our trading activity. Now, one of the parameters we made mention of was the fact that we had lower highs after price action tested the highest point here at the $82.15 level. And the appearance of lower highs was a clear sign that sellers might probably be pushing price to the downside. And what we did was to connect the series of lower highs, as you will see here, to give us a descending trend line to work with for yesterday's trading session. And one of the things we said here is that as long as price action remains below that descending trend line, we'll feel comfortable selling, looking out for selling opportunities. And the only condition that will make us want to buy the US oil asset yesterday was to see price break out and retest that trend line, which of course never happened. So as a result of this trend line, we anticipated breakdowns of the $81.40 level to trigger our first sell position for the week. And of course, I told us all that for those who are already profitable for the week, you can afford to leverage on the profit you had made so far to capitalize on that bearish momentum. And if you had done that, you would have been part of that bearish momentum to the downside. And another thing that I also mentioned here is that the ascending trend line, which has been supporting that bullish momentum in the last 5, 6, 7 weeks now, if it gets broken, then this could be a sign that we could be witnessing a sell-off, where I said we don't know how far that bearish momentum will happen. I also mentioned that if price gets into the major ascending trend line here, which also shares a confluence with the $80 MAC area, we are going to be looking out for more opportunities if price action breaks down that structure. So with a sell stop order below that area too, it also welcomed more opportunities. So on this single move, we were able to scoop close to 700 pips from 5 positions on the USOilSPOT. It was quite an interesting and very profitable bearish move we had there yesterday. And for those who took advantage of this opportunity, well done to you for being on standby to have caught that move. Now, if you still have a sell position running at this point in time, you know how we do it. We want to be moving all stop losses to secure the current sell position. Of course, price had moved significantly well, and we don't want a situation where we get taken out from a very considerable profit size into something smaller than that. So in this scenario here, I'm of the opinion that anywhere around the $79.50 level and the $80 area seems most appropriate to secure this current sell position. Of course, you know we want to give room for price action to break, so enough room around that area should be substantial enough to allow any form of retracements that might want to happen along the line. So with the well secured positions at this point, what is going to be our next line of action for today? So, well, I've already conducted a comprehensive technical analysis of this current market structure, and for those who are with me on both my TradingView and the Telegram platform, you will definitely have gotten an update on how we are going to be managing the USOilSPOT for today. So for the sake of those who are not, let's run through my commentary on the USOilSPOT before we go into the details of what we are going to be looking at. So right here on the TradingView platform, I also have it on my Telegram platform too as well. So right here on the TradingView platform, this is how we have been monitoring, managing our position on the USOilSPOT so far this week. Very, very profitable week for every one of us here. And this morning I mentioned here that, as discussed during our live session yesterday, the bearish momentum in US oil was triggered by a breakdown below the $81.40 level and the ascending trend lines. This movement led to the initiation of sell positions, resulting in a substantial profit of over 700 pips from 5 positions. So I said here that make sure to secure all sell positions while we continue to monitor the market for potential new opportunities. So right here this morning, I was able to identify another level at the $78.90 level, which could help us to capitalize on more selling opportunities in this market. So let's go back into the live chat and see what I was mentioning here. So I will be focusing on where our center of focus is going to be for today. So this is the new line I identified this morning, and that is the $78.90 level, which happens to be the lowest point price action had been prior to the beginning of this live session. And one thing I said here in my commentary was that we are going to sell if price action breaks down and even retest that structure, which actually has happened right now, as you will see the nature of price action in the last 1 hour. So what we are going to be doing here, of course, we have a sell position triggered by now, especially for those who are already profitable on the US also far this week. Now, for those who are just joining for the first time, well, we want to always wait for price action to retest the structure, followed by a couple of selling pressure before we join that bearish move. Then in addition to this, support line at the $78.90 level. We have noticed here that since the later part of the New York session yesterday, we noticed lower highs in this particular market. So in fact, I want to connect the series of lower highs here to give us a structure to work with for today. So if we do that appropriately, after bringing up our line chart, we should be having something like this. So bringing back the candle chart, we do some little adjustments so that it can capture the wick of those candles. So we have something like this. So what this simply means is that we shall continue to look out for more selling opportunities as long as price action remains below this descending trend line. So even though we are noticing some buy pressure right now, it could be price is retracing back into that trend line to incite a sell-off, the downtrend continuation. So to give a visual representation of what I'm talking about, so we could see something like this. Price comes back into this area or this area around here, and if continued selling pressure happens, it could transition into something like a double top structure, which from a technical standpoint is a very strong reversal pattern. It could be a head and shoulder pattern, a rising wedge, whichever case it may be. Then we want to be joining that move to the downside. But for some of us who are profitable so far this week, we're already in this trade right now, though price is in a loss on this current position. So our stop loss should be around the previous high, which will be dovetailing to about 50 to 55 pips stop loss, which seems most appropriate here. And let's see how far this bearish momentum is going to go. Okay. I see a comment from Richard Blackett. He says that everything is fine except can you reposition the August logo from the bottom right hand corner of the screen is blocking. Okay, thank you very much for your feedback. Okay, you know what I'm going to do? I'm going to ensure that it's not going to be part of the okay, so let me see what I can do here. So do you like it like this? I hope it's better like this right now. Thank you very much for your feedback, Richard. I really appreciate it. Thank you. So we continue to look out for selling opportunities as long as price action remains below that descending trend line. So our center of focus is simply between along this area. So we have the $78.90 level and of course the descending trend line here to guide our trading activities for today. Now, in as much as we're looking out for selling opportunities here, you know how we do it in this community. We want to also take into consideration the potentials of the buyers too. We always want to have a balanced perspective in the market. We are not getting too excited in a particular direction. We want to hold on to the other perspective too as well, so that whenever price action moves in the opposite direction, we are also on standby to capitalize on that move. Now, with the situation we have here, if we are going to consider buying, then definitely we want to see that descending trend line breached to the upside. So if we are going to consider buying today, price action must first of all break out of that descending trend line. Then at the breakout of that structure, then we can start considering that we want to buy the USOilSPOT. Now remember that we are not always getting too excited when we sight a breakout of such counter trend opportunities. We want to wait for confirmations to happen before we want to join that move. Now, if a breakout of the trend line happens, we want to scale down into our lower time frame immediately to identify confirmations that truly sellers are finding it difficult to drop back below that descending trend line, which of course would reflect on the chart on our lower time frame, of course, as price action rejecting the descending trend line coupled with buy pressure above that structure, after which we can be part of an uptrend continuation. And remember, we have levels that we can use to capitalize on more opportunities if price action does break out and retest that level all the way to the upside. Now, to help us capitalize on any bullish momentum here, if price action ever breaks out of that key level, then we want to have a level that we will use to maximize that move. So we have something falling around the 79 $79.20. Hold on a second, we shall get that now. I think it's a $79.20 level. So let's mark that level out on our chart. So I want to give this a different color. So I want to give it a blue color so that we can differentiate it from the other key levels here. So I think, okay, now that's it. So you can see how this level here has been a selling niche at some point here before we saw the breakout of the structure. Price came back to retest a couple of times before we had the breakdown of that level happen here. So if price action breaks out that level, then a retest of the level, which also shares a confluence with that descending trend line, should welcome buying opportunities. So we are going to be looking out for buying opportunities if price action breaks out and retest the $79.20 level, which of course would have also broken out of that descending trend line. So that is how we are going to be capitalizing on any buy opportunity around this area. So let's see how the market will play out. And of course, trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates on how we are going to be managing that position. So these are my views here on the USOilSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument on our watch list. All right, so in the absence of no questions, I'm of the opinion that we're all on the same page here. So we continue to hold on to a bearish bias here as long as price remains below the descending trend line. So with that being said here, let's move on to the next asset on our watch list. So the next instrument on our watch list is the GBPUSD, which has been doing pretty well since the beginning of the week. And in fact, in the last 24 hours, we were able to scoop in more trading opportunities after citing the breakdown of levels that we identified during our live session yesterday. So let's run through how the week started for us all on this asset. In fact, the week has started on a very, very strong bearish momentum, though we had a couple of losses at the beginning of the week. If you remember, okay, I want to, that just reminds me, hold on a second. So we just want to take this out so that we can have a clear screen. So since the beginning of the week, we actually had buying opportunities at the beginning of the week. Remember, we observed this range where price action was caught within the 1.28600 and of course the 1.28450 level to give us an insight into the level of indecision at the beginning of the week. And for the fact that price action was above an accumulation zone we identified on the higher time frame, we were of the opinion that chances that price will break out of the resistance line of this range was more prominent than a breakdown of that structure. So as a result of that, we had a buy stop order above the 1.28600 level, and a couple of times we had our position taken out in a loss on that one, but fortunately for us, we were able to recoup our profit after price action did break down the 1.28450, and since then we have been selling the GBPUSD. And to further guide our trading activity throughout this week, we had a couple of trend lines after connecting the series of lower highs. And one thing we agreed here is that as long as price action remains below that descending trend line, we have no business buying the GBP USD. Now, during our live session yesterday, we had a setup here, which was initially looking like price is gradually evolving into a reversal pattern. Remember, we saw this structure happen here. Let me give you a visual representation of what we talked about. So we saw this, we saw a higher low, giving us a scenario that is looking as if a bullish momentum is building up behind the scenes. And one of the things we said here that we are going to be doing to capitalize on that bullish momentum is to find the breakout retest of the 1.279800 area to join an uptrend continuation to the upside. Personally, I had a buy stop triggered around that area. You know, for us who are profitable so far this week, we can afford to leverage on the profits we had made so far. So I saw price broke out of that area, giving me that buy stop order triggered. But unfortunately, I was taken out of that position, but we saw price trigger our sell stop order after the breakdown retest of that ascending trend line happened yesterday. You'll recall that we had this ascending trend line as one of the parameters that will be guiding our trading activities yesterday, and we said a breakdown retest of that structure will definitely welcome selling opportunities. And on the lower time frame yesterday, we saw the breakdown happen, retest of structure, then price since then have been finding lower lows in this particular market. Then remember, we also said if we have the breakdown of the structure, we want to be maximizing the potential of this bearish move by having another sell stop order below the 1.27480 to maximize that bearish momentum, which of course happened, and we saw price action move significantly well to the downside. So we had about how many pips? I think we had about close to, if you still have a sell position running right now, the first position is running with about 100 pips, while the second position is currently running with about 70 pips in profit. So we have a total of 170 pips at this particular point in time. So of course, you know how we want to be doing it. When we have price action move significantly well in our favor, we want to be moving all stop losses to secure the current sell position. So right now, we want to be moving all stop losses to the previous high here. So anywhere around the 1.273 and the 1.272 seems most appropriate to lock in the profit here. Of course, we do want to give enough room for price action to breathe. Now, with a well-secured sell position at this point in time, how do we intend to manage our positions and get ready for the Bank of England's interest rate decision, which is coming up in about a couple of hours from now? So in order to capitalize on this opportunity, let's first of all take a quick look at what our expectations, what I said we are going to be looking at today on the GBPUSD. And for those who are with me on both my TradingView and Telegram platform, you definitely would have gotten an update in that regard on how we intend to manage our position here. So let me go into what I said here this morning. So this is my update here this morning. I said we've achieved a remarkable gain of over 130 pips. So it was 130 pips at the time I shared this commentary across two positions. It is time to secure all sell positions as we eagerly await the Bank of England's interest rate decision coming up later today. In our upcoming live session, I said, yeah, we shall dissect this, of course. So while trying to decipher what price action is likely going to be doing today, we had this new support line figured out at around the 1.26850 level, which was the lowest point where price action was at as at the time I was sharing this commentary. So let's go back into the live chat and see what I'm talking about. So I will zoom in to where our center of focus is going to be for today. Now, this was the level I identified this morning, had the 1.26850 area, which was the lowest point, and I said there that we are going to be looking out for more selling opportunities if price action does break down, retest that 1.26850. And you know how we do it. For those who are profitable so far this week, we can leverage on the profit we have made to test what is around that area, setting a sell stop order. And if you have done that, you would have a sell position triggered at this point. But for those who are going to be joining this sell position for the first time, of course, you will need to have a confirmation before you jump into this position. And the confirmation is going to be looking like a breakdown happened first of all. Price comes back to retest the structure, and continued selling pressure should be what to be looking out for to join that bearish move. So it's always good to be part of that move right from the beginning of the week so that you can afford to put your sell stop order easily and leveraging on the profits you had made so far to capitalize on that move. So let's see if the market will present that second chance, that is a retest of structure for those who will be joining afresh from this current structure. Then in addition to the 1.26850, it is quite obvious that since price tested the 1.26850, we saw some buy pressure resume, leading into this kind of scenario where price action now found lower highs. And you know how we do it in this community. Immediately we start noticing lower highs, we want to be bringing our trend tools to connect the series of lower highs to give us a trend line that we are going to be using to guide our trading activity for today. Now, if we do that correctly after bringing our line chart, we should be having something like this. Now, let's bring back our candle chart, do some little adjustment to capture the majority of this week. Then we should be having something like this to work with for today. So what this simply means here is that as long as price action remains below this descending trend line, we shall feel comfortable in our sell position while we also look out for more opportunities to capitalize on this bearish momentum. Now, in as much as we're looking out for selling opportunities here, we cannot ignore the potentials the buyers also have. And considering the fact that the expectation of a interest rate hike from the Bank of England today is very, very popular in the market, there is a likelihood that we could see a bullish momentum as a result of a higher yield on the pound sterling. So as a result of this, we want to also be on standby to capitalize on that momentum if it does happen. Now, if we are going to be joining any bullish momentum here, definitely by now you know what to expect here. We need price to break out of that descending trend line for us to capitalize on that move. Now, to capitalize on that move, we also need some trend, we also need some levels we want to be marking out on this chart, which we are going to be using. And we have something along the psychological area, had the 1.2700 area, which of course you want to be marking out on your chart right now, as we will be needing this as a yardstick to guide any bullish momentum at this juncture in the market. Now, if we bring back our candle chart, you will see how important or how that level has been a major determinant of price action in the past 15 hours, I think. So look at what happened here, look at the structure here, and look at the continued selling pressure rejecting the zone around this area. And in fact, it also shares a confluence with that descending trend line where a breakout retest of the 1.2700 level will be that opportunity we are looking out for to buy the GBPUSD today. Now, if price does not break out of this descending trend line and the 1.27, we have no business considering buying the GBPUSD today. So ensure you move your stop losses for those who still have a sell position running at this point in time, and let's see how the market will play out around this area. We still remain very bearish here, considering the fact that price still remains below that descending trend line we just identified here this morning. So let's see how the market will play out from this current structure. And if you do have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument on our watch list for today. All right, so I got a personal message on my DM right now. Someone was asking me that what happens that we already have a new low in this particular market. So let me go back to, so let me run through that quickly. Now, this person was saying that we have a low here, which is around the 1.26720, and that can we add more sell positions if price action breaks down that structure? Well, if you are very profitable this week, you can afford to take advantage of that move. But personally, I am of the opinion that because of the interest rate hike, which is very possible today, that we might likely be seeing a bullish momentum in this particular market. So I don't want to consider adding more positions after the breakdown of the 1.26850 anymore. I want to stay content with what I have so far, and let's see how far that bearish momentum will go. But it's something you can risk since you're already profitable so far this week. Place some stop loss below that structure and then capitalize on that move. But personally, I'm not doing that. I'm content. I already have 3 positions running on the GBPUSD, and my stop loss is placed above the 1.27 area. So why I'm okay with this one, but if you can afford to do that, no problem. You can place your stop loss below that structure. It's quite fine. All right. So in the absence of no questions, I want to assume that we are on the same page here. So we shall be moving right into the next instrument on our watch list for today. So the next instrument on our watch list for today is my favorite, the XAUUSD, which I love so much. And in fact, I think I love it so much because I understand the psychology of the market very, very well, using simple structures, of course, trend lines, key level, and chart patterns to identify trading opportunities. So let's run through this quickly and see how the week has gone for us. In fact, it has been a very tremendous week for us. We had opportunities where we bought, we had opportunities where we sold, and in fact, on both occasions, we were very, very profitable on this asset. So let me run through how the week started for us here, and then we talk about how we are going to be managing our positions for today. So at the beginning of the week, it was more of a bullish momentum. Remember, we took advantage of the 1,000, the breakout of the $1,956.50 level. This was the first point where we bought the XAUUSD at the beginning of the week. And the reason why we bought around that area is this. Now, remember at the beginning of the week, we saw that price action was initially on a very strong bearish momentum as we saw lower lows and lower highs. But as soon as price got into the $1,953.50 level, we begin to notice buy pressure around this area, giving us a clue that sellers are finding it difficult to break through that structure. Then we saw a sharp rejection of that ascending trend line here, giving us further clue of how strong the buyers are likely going to be around that area. Now, one of the things that also buttressed this is this ascendant trend line that we identified here. So we said we were going to be using this ascendant trend line to guide our trading activity, and that as long as price remains above the ascendant trend line, we shall feel comfortable in our buy position. And that is exactly what we did. We bought at the breakout of the 1,956. We added more positions at the breakout of the $1,960.40 level, more positions at the 1,963, and more positions at the 1,967 area. So we had about 4 positions running before this bearish momentum came in to take us out of all the buy position with a significant amount of profit on that single move. Now, on Tuesday's trading session, we were at a crucial confluence, and that was around the $1,956.50 level, as you will see there. And in fact, I was saying here on that day that I'm of the opinion that price action will likely be going bullish. And one of the reasons, I think we had a couple of reasons why we had that idea. The first one is the fact that price is back into the 1,956, and remember, that is where we saw the first buy position for the week, and we were thinking that because of the memory for buy power around that area, we are likely going to be seeing another wave of bullish momentum around that area. And with that, we also had the ascending trend line, remember, which also shares a beautiful confluence with that zone And we were saying as long as price remains above the ascending trend line, we shall feel comfortable buying the XAUUSD. And as a result of that, for those who are profitable on the XAUUSD, we had a buy stop order above the $1,956.50 level to capitalize on that uptrend continuation. Of course, we had that position triggered, but unfortunately, we were taken out in a loss on that one as we saw selling momentum come in, and then we saw the breakdown retest of this ascending trend line, which was that beautiful opportunity for us to join that decline to the downside. And of course, we took advantage of that one, recouping the loss we incurred on that buy position on that zone, making us have a very positive side to our portfolio on the XAUUSD so far this week. Now, during the live session yesterday, we also acknowledged a potential trading opportunity. Of course, we were even thinking that we are going to be buying the XAUUSD, just like the setup we saw on the GBPUSD. So we had something like this. The first one we saw here was the fact that price was finding higher lows, and at this point, we were considering that we are likely going to be seeing a reversal move. And coupled with the ascending trend line here, we saw something like a double bottom structure, as you will see here. And immediately we identified a neckline area at the $1,952 area, where we said we are going to be joining a bullish momentum if price action did break out and retested that structure. And of course, for those who are profitable so far this week, we of course did add our sell stop order above that area. We had the sell buy position triggered, and of course we were taken out of that position again in a loss. It's okay, we are just leveraging on the profit we'd made so far this week, so we are quite fine on that loss. Now, we had price break down the ascending trend line, which of course is part of our ideas for yesterday, that a breakout of the ascending trend line definitely will welcome selling opportunities for us. So with a sell stop order below that structure, we had another sell position triggered at the breakdown of the $1,948.30 level to give us another sell position to capitalize on. And remember, we also had another level at the 1,943 level, which of course was the lowest point as at the time we were analyzing this yesterday. So we had another breakdown which gave us two positions in the last 24 hours to capitalize on. So it was quite an interesting and profitable trade for every one of us. And for those who took advantage of this opportunity, well done and kudos to you for being on standby to catch this move. And right now, you know how we do it when price action moves significantly well in our favor. We want to be moving our stop losses to secure this position, as we've noticed now that buy pressure is beginning to show some strength around the 1,934 level. So right now we want to be moving all stop losses, and the most appropriate area seems most suitable above the 1,939 and the 1,942 zone, or the 1,943 area. Of course, we do want to give enough room for price action to breathe, as we could see something like a retracement back into that zone before the downtrend continuation happens. So I'm just saying for now. Now, with a well-secured sell position at this point in time, what is going to be our plans, and how do we intend to capitalize on more trading opportunities today? Now, remember, we have an high impact event coming in from the US economy, which is the ISM Services PMI, which of course could send in some volatility in the market too as well, bringing some price, significant price movement, of course. So definitely we do want to lock in our profit at this juncture in the market. Now, let's talk about what our plans is going to be like for today. Now, I want to run through my commentary on the XAUUSD this morning. And for those who are with me on both my TradingView and Telegram platform, you will definitely have gotten this update. So let's run through this quickly. So this is how we have been managing our position on the XAUUSD so far this week. So this is my commentary here this morning as regards to this current setup. So I said here, We are currently enjoying a substantial profit of around 200 pips from two positions. The recent strength of the US economy and job market has sparked fears of rising interest rates, leading to a significant drop in the gold price. Now, all highs are on the ISM Services PMI, which is coming up later today, of course, as it may provide further clues about the potential movement of the US dollar. So, to safeguard our gains, it's essential to secure our position at this point. Stay tuned in for further updates and insight. So that was my commentary this morning as regards to the setup, and I do hope that you moved your stop losses accordingly, while we also look out for more opportunities at the breakdown of the 1934 level. So with this situation here, our center of focus is right within this area. And one thing you would observe here is that since price action tested the 1934 level during the New York session yesterday, we have been noticing buy pressure around that area, which of course has led into a situation that emphasized the uncertainty in this market at this point in time. Now, price is caught within a range right now, and the next thing we are going to be doing is to acknowledge that range. Very, very important, as this is going to be one of the parameters we are going to be using to guide our trading activities for today. So we have a range now, and then we have we have the resistance level at the 1938 level, as you will see here. So back into the structure right now. So we have something like this, and you all know how we do it in this community. When price action falls into this kind of range like this, we already have a flat channel to work with. So we want to remain patient and wait for a signal to happen, which of course will either come in the form of a breakout of the resistance line to give us a signal to join a bullish momentum, or the breakdown of the support line to give us an opportunity to sell. Now, with this situation here, price is confined within that range. We of course want to remain very patient, as anything could still happen from this area. Now, from a technical standpoint, we want to be considering buying the XAUUSD at the breakout of the 1938 level. But at this point, I'm of the opinion that because of this strong bearish momentum in this market so far this week, I would want to see a breakout retest of that structure before I want to be joining. So if I give a visual representation of what I'm talking about here, so I want to see a breakout, retest of structure on my lower time frame. So once the breakout happens, we scale down into our lower time frame, like the 5, 10, or 15 minutes time frame, to look out for retest of structure to confirm that truly buyers are gaining momentum and sellers are finding it difficult to drop below the 1938 level. And if this happens, we're going to be joining a bullish move. And remember, we have levels like the 1943, 1948 to capitalize on more opportunities if price action does break out and retest that structure. So that is how we are going to be considering buying anything on the XAUUSD for today. However, if price action continues to drop to the downside, then we want to be having a sell stop order below the 1934 level to capitalize on a downtrend continuation. Now remember, if you are new on the XAUUSD, you want to wait for a retest of structure confirming that sellers are getting stronger to join that bearish move. But if you've been with us and profitable so far, then a sell stop order below that structure will do quite fine. So these are my views here on the XAUUSD. So we do want to mark out these levels on our chart, as we will be needing them as a reference point to guide our trading activities for today. So if you do have any questions whatsoever as regards to this current setup, let me know in the comment section, and we'll be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move into the last instrument on our watch list for today. So I just saw something here that caught my attention, which I missed when I was trying to dissect the market this morning. So if we look at how the week has started here, you will notice that price action has been very, very bearish in this particular market. And as a result of this, we've been seeing lower lows and lower highs. And if we have this kind of situation, definitely we want to be connecting them, which I missed earlier, but now I just saw it. So we needed to connect the series of lower highs, as this will be one of the parameters that will be guiding our trading activities for today. So as long as price remains below the trend line, it's still looking very bearish in this particular market. So let's see if the trend line will be broken to the upside to emphasize the bullish momentum, and if price will remain below the trend line, then we will have no other choice than to continue to look out for signs and signals that will help us to join any bearish move to the downside. So you want to be marking down that trend line too on your chart. So with that being said here, and in the absence of no questions, I want to assume we're on the same page. So we shall be moving right into the last instrument on our watch list for today, which is of course the USDJPY. Now on the USDJPY, this setup here, yesterday, okay, since the beginning of the week, we have been buying actually. And then during our live session yesterday, we acknowledged an ascending trend line, which we said we were going to be using to guide our trading activity for the week. Now, something interesting happened yesterday morning as we saw the breakdown of that ascending trend line, which triggered a selling opportunities with the hopes that price action might likely be going to the downside in the form of a retracement move. But we saw what happened here. I told us yesterday we should move our stop losses, and we were taken out of that position, of course. Then to guide our trading activities yesterday, we had a trend line which we spotted here after connecting the series of lower highs. And one of the things we said here yesterday is that a breakout of that trend line will welcome selling opportunity, will welcome buying opportunities. And if price remains below that trend line, and of course that ascending trend line, will be looking out for selling opportunities. Of course, this never happened, but instead we saw price break out of the trend line, retest of this, and then we saw price continue to the upside, giving us a buy position which never lasted long. In fact, this position here was closed at break even for me here, as we saw the strong bearish move that took us out of all the buy positions at this point in time. Now, price action is back into the 142.850. Remember, this level was where we bought at the on Tuesday at the beginning of this month, and we have noticed how this level has been a major determinant of price action. Now, see what has been happening here. We saw buy pressure here. Then we saw a little breakdown of the structure, which never stayed for so long, as we saw price action immediately climb back above that level. Now we can see price is back into that crucial level at the 142.850, a level which has been characterized with buy pressure since the beginning of this week. Now at this point in time, it's quite reasonable that we buy as long as price remains above the structure. So if I see buy pressure around this area in the next couple of hours, then definitely I want to be positioning myself for buying opportunities. Now, how do we capitalize that? Now, let me zoom right into where our center of focus is going to be for today, which is the 142.850. Now, for me to join any bullish momentum here, I want to see something like a buy pressure. I want to see something like a double bottom structure, head and shoulder pattern, then identify the neckline where a breakout retest of the neckline will give us an opportunity to buy. That is, if we do have a neckline area, then we want to be joining any bullish move. But at this point in time, nothing significant is coming up right now. So we will just need to remain patient and see how the market will be reacting to this current structure. In fact, I want to readjust this trend line so that it can capture the lower highs here. So we can see we have a high here, we have a lower high here. Then we saw the breakout and retest of the trend line here. And so let's see if the market will respect the trend line one more time. And if that happens, it shares a beautiful confluence with the 142.850, whereby pressure around this area will be a beautiful sign to join an uptrend continuation. So let's see how the market would react to the structure. Excuse me, please. Now let's see how the market will react to the structure to join an uptrend continuation from here. However, if price action drops below the trend line, I'm still going to be doubting selling at this point in time unless something significant happens that says we have no other choice than to sell. But if anything new happens, I will definitely give you an update in the comment section of both my TradingView and Telegram platform to guide our trading activity. So at this point in time, I'm still of the opinion that buy pressure will resume around the 142.850, where we have a crucial confluence, the descending trend line and the 142.850 to capitalize on an uptrend continuation. So let's see how the market will play out from this area. And of course, I will definitely be with you in the comment section on both my TradingView and Telegram platform to give you an update on how we are going to be capitalizing on whatever patterns or structures that emerge from that zone. So ensure you are part of my TradingView platform, Telegram platform, of course, so that you don't miss out on that insight when the time comes. So on this note, I think we can call it a day here. But if you do have any questions whatsoever, feel free to let me know. So I will be taking the next 10 to 15 seconds to see if there are any questions before we draw the curtain for today. All right. So in the absence of no questions, I want to assume we're all on the same page here. And it has been a wonderful moment with you guys this morning. And I'm very much confident that we are ready and prepared to capitalize on any potential opportunities on the financial asset we took today. So we were able to take on the USDJPY, the XAUUSD, the GBPUSD, and of course the USOilSPOT for today's London and New York session. And in fact, we were able to simulate all the potential opportunities that could come up with using simple parameters such as trend lines, key levels, and of course chart patterns to identify potential trading opportunities for today. So I would implore us to allow our structures to mature, allow our patterns to mature before we jump into any position. And of course, I'm going to be with you on both my Telegram and TradingView platforms to give you updates on how we intend to manage all our positions on this asset and commodity that we are looking at for today. So thank you very much, guys, and please support this project. I really appreciate your likes. Your support are very valuable to me, and in fact it helps the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial to them. Thank you very much as you do so. And that reminds me, we are going to be going live 5-10 minutes into the New York session on the XAUUSD. So you want to be joining us and see how we trade the XAUUSD together, how we buy, how we sell, how we move our stop losses, how we manage our positions on the XAUUSD. It's a session you don't want to miss. So I implore you to be part of that session. It's going to be kickstarting 5 to 10 minutes before the New York session today. So I hope to see you right there in the comment section on that one. And I will be dropping the link in a moment. I don't have it right now, but I will definitely drop it on my Telegram platform. So if you are with me on Telegram, you will be getting that link. And of course, if you haven't subscribed to this channel, please do. If you do so, you will always get notifications whenever I upload new videos and content. And of course, when I'm going live on the XAUUSD prior to the New York session today, you will definitely get a notification. So when I share the link, you can click on the link, click on the notify me button so that whenever we come online, you will get a notification that we are finally live. So on this note, I want to wish you all the best of luck for today, and I still look forward to seeing you same time tomorrow, of course, as we get prepared for tomorrow's trading session. So do have a wonderful day, everyone, and I hope to see you very soon as we get prepared for the New York session. Do have a wonderful day. Bye-bye.